Hello and welcome to KYC, that is Know Your Company. I'm Mahima Vachrajani, and let's try to figure as to what company are we going to decode today for you, our viewers, as well as people who invest in a lot of stocks. But, let's try to guess the company that we're going to talk about, right? The first one, let's try to pull up the slide and see. Leadership in Mangalsutra segment. This company basically holds the leadership in terms of B2B segment in the Mangalsutra segment, listed on September 17th, 2025. So fairly recent listing that we are talking about. The stock is up 29% from its IPO price, and that's not been the case for a lot of IPOs that have been recently listed in the past 6 odd months. Furrowing now into the gold bridal jewelry, which is a high margin business and also a high value business, which is going to give them leverage going forward, considering the manufacturing capacity also that have. So that's the guess the company part. Let's try to understand as to which is the company that we're exactly talking about. We are talking about Shringar House of Mangalsutra. With regards to this company, what it does and what is exactly the manufacturing capacity and what is the exact flow of manufacturing for this one. Basically, it specializes in design, production, distribution of Mangalsutra, both in terms of B2B, and it also gives it to retailers. So 15 distinct collections and more than 10,000 active SKUs is what the company has in terms of only Mangalsutras right now. In terms of prominent customers, big names are there. Titan, Reliance Retail, Novet Jewelry, Joya Lucas, Malabar Gold, all of these are the clients for Shringar House. Now, the company also serves 34 corporate clients, 1,089 wholesalers and 81 retailers. So it's a complete B2B business that it does in Mangalsutras. The company is focusing now on high value added jewelry segment going forward, and in terms of where the capacity goes, it has around 2,500 kg per annum capacity and also has an integrated manufacturing facility that it does. So completely in-house manufacturing is what it has, and that to an integrated one. In terms of the key news coming in, I think an astute investor, S. Iyer, has acquired 5 lakh shares on 22nd of April. So this was a big news coming in. That's why we saw this movement in the stock price as well. The company is now diversifying into gold bridal jewelry, like I mentioned earlier as well, right? It's a high value business and high margin business as well. And in terms of where the other news aspect is concerned, the company is also shifting its manufacturing capacity from Lower Parel to Kandivali. So that's also another news to keep in focus and keep in mind. Now, in terms of how the industry is faring, right? Overall, India's wholesale gold jewelry, as per data from various sources, the segment is expected to reach around 48,900 crore by calendar year 29, and this suggests a CAGR growth of anywhere between 9 to 10 odd %. And this is the CAGR growth that we're talking about from calendar year 24 to 29. So that's the CAGR growth at which the entire industry is growing, but the company is growing at a much faster pace. Now, strong HNI interest is also there in the counter, and in terms of volumes as well, we've seen good growth coming in as to where the share price action is concerned. Strong distribution network is helping it in cross-selling also going forward when it diversifies into high value and high margin business of bridal jewelry. And the other reason as to why it is in a sweet spot is because larger order wins are expected from corporate clients going forward once it diversifies, plus its existing business as well. And the company is targeting unorganized sector and undeserved tier 2 to tier 4 markets. So I think the focus more right now is from tier 2 to tier 4 markets, and that will give company an overall leverage going forward in terms of its distribution, in terms of its selling opportunities as well. Now, let's try to take a look at what are the parameters that we're going to talk about in this segment. The first one that we're going to pick up is the income statement, followed by balance sheet, then cash flow, and then return ratios. And then we're also going to talk about how the shareholding pattern is for the company, followed by street cred as to how the counter has performed so far since listing, valuation metrics, as well as what's the outlook going forward. And then we'll also be speaking to the management of the company to understand as to what the outlook of the company looks like. But let's start talking about the first parameter, the income statement. In fact, like I said, we'll be speaking to Viraj Thadeshwar, who's the AD and CEO of Shringar House of Mangalsutra going forward. But let's start talking about the parameters, the income statement first. Now, if you take a look at the last 3-year CAGR growth in terms of where revenues stand, it's been a strong growth of 21%. EBITDA growing at almost 45% of 3-year CAGR, and net profit has seen a growth of 46% CAGR. Now, a lot of this growth in the past 2 years has also come in with rising gold prices. Because of gold prices going up, we've seen a lot of value growth coming in, but we'll try to understand from the management as to how volume growth has also fared. Now, because we've seen strong CAGR growth in the past 3 years, we've given it a thumbs up. In the past 9 months also, the company has done fairly well. Revenue growth of 41% year-on-year basis. For EBITDA growth, it's even stronger as compared to how its 3-year CAGR has been like, a 65% growth, and net profit growth at 76%, much better as compared to what it's done in the past 3 years. In terms of margins, I think this is where the pain point is, because margins have been reducing for them, but them foraying into other segments might improve their margins going forward. So that's with regards to where income statement goes. But let's try to take a look at the balance sheet aspect as well, as to how balance sheet has been in the past 5 odd years. In terms of where the balance sheet goes, overall, from a perspective of share capital perspective, we've seen that it got listed recently in September 25, and in terms of reserves, they've been growing in the past 3 years from a 128 crore to almost an increase of 500 odd crores. So they've been reserving whatever profits they're making from. Even in terms of total equity, that aspect has also gone up because of reserves going up. Borrowings have also slightly increased. So we try and understand from the management as to why these borrowings have gone up, and this is largely on account of both short-term and long-term. Short-term largely on account of working capital, but we'll try to understand as to what the debt repayment plans are looking like. Cash and bank balance is an area of concern. We'll try to ask the management if there is any fundraising on the cards considering the expansion that they're planning, because overall cash balance has remained in that range of just 3 to 4 odd crores. So that's with regards to where balance sheet goes. Now, let's try to pull up the cash flow statement as well. This is the third metric that we're going to talk about. In terms of cash flow statement, cash flow from operations has turned negative in FY25 and has also stayed negative in September 25. And considering 9 months at a negative 7%, the year will also close at that negative number as well. But overall, PAT has seen a good increase, but cash flow to PAT ratio has been on a negative footing. So I think that is an area of concern. We'll also speak to management about it. But overall, even net cash flows has been on a negative footing, and that's why we've given it a thumbs down. Now let's try to pull up the return ratios aspect and see as to how they have been. A healthy return ratio and has been largely maintained in that range of 20 to 24%. So your ROCE has been stable and has been at that 24% mark in the last 3 to 4 odd years. So I think there is no area of concern here, and we've simply given it a thumbs up when it comes to the return ratios. Now, let's try to see the street cred of this company as to how the company has done when it comes to the share performance since its listing, and as to how the entire performance has been like. But before we talk about that, let's try to take a look at the shareholding pattern as well. There is skin in the game when it comes to the promoters, because promoters have been constantly holding 75% into this counter, and it doesn't look like they're going to reduce their entire holding. But FI holding, there is FI interest coming in from a 4% just during listing. It's gone up to 6% in just a matter of 2 quarters. DIs, of course, have been selling and FIs have been buying that. So from a 4% in September 25, DI holding has come down to around 2 odd percent. Public holding remains fairly stable around that 17 to 20% mark. As of March 26, it stood at 17 odd percent. So that's with regards to how shareholding goes, but there's skin in the game, and that is why we've given a thumbs up. Let's try to pull up the street cred, like I was talking about, from the life high, of course, it's down 19%, and this is considering the way markets have moved in the last couple of months. But overall, from its IPO price, it's up 29%, and from 2026 low, it's up 26%. So there is gain coming in from 2026 low as well, and that means that it's showing high investor interest in this counter. Just to point out here that IPOs in the recent past 6-8 months have not done very well. As compared to that, at least this IPO has seen gains of 29% versus its issue price. So that's with regards to where street cred goes. Let's try to pull up the valuation. This is on an interesting aspect, because overall, if you take a look at the valuations of all these jewelers, because Titan is trading at a 80 times P right now, Thangamayil at 49 times, Kalyan Jewellers at 36 times, and this as compared to Shringar just trading at 21 times. So valuations as compared to where peers are concerned is much more attractive for something like a Shringar house Mangalsutra, and considering that it's growing at a very fast pace, at a very good CAGR, the valuations right now are justified at where they stand. Let's try to then look at as to how the outlook of the company looks like in the next coming years and near future as well. They are diversifying into gold bridal jewelry, and that's certainly a thumbs up, because like I said, it's a high value, high margin business, which is certainly going to benefit the margins for the company. Plus, it's targeting the unorganized sector, that is tier 2 to tier 4, where there's a lot of unorganized sector that's playing its part in different ways. I think organizing it is going to definitely benefit the company. Third-party facilitators are onboarded to drive scale from here on, and that is something that is going to augur growth for the company going forward as well. Lastly, in terms of where the outlook stands in terms of expanding, the company is planning to expand to 5 cities and has identified more for further rollout as well. So the company is not just planning to diversify into segments, also planning to expand in terms of where geographies are concerned. Plus, it's also building going forward a strong presence when it comes to their overall presence. But this, of course, is with regards to where the outlook goes. Let's try to now see as to how the cumulative ratings look like of all the 8 parameters that we talked about. The first one being income statement, we've given a thumbs up. Good CAGR growth, all in terms of revenue, EBITDA, as well as net profit. Margins, of course, still a concern. But overall balance sheet is a thumbs down, because cash position is at a very thin lining, plus there is borrowings which is growing. So we'll talk to management about that. Cash flow, we've seen negative cash flow in FY25, operating cash flow in negative in FY25, as of September ending as well, and that's why we've given it a thumbs down. Return ratio is very positive, very healthy, near that 22 to 24% mark, so giving it a thumbs up. Shareholding, also a thumbs up, because there's skin in the game, 75% held by promoters, plus FI seeing an increase in stake. Street cred is slightly a thumbs down, because overall, if you take a look at the picture as to how it's off from the high point, we've seen some pressure coming in the stock. Valuations, definitely a thumbs up, much better as compared to where the peers go, and that's why we've given it thumbs up. And outlook, most certainly a positive one, because the company is planning to expand into segments as well as geographies coming in. So the total rating that we've given this counter is 5 out of 8. So that's the overall rating. Of course, with regards to how the Shringar house of Mangalsutra goes. But let's try to get in the management, as well. We're now joined by the management. Sir, my first question to you with regards to, what we talked about. We've been talking about how, significant growth you've seen in the past 3 odd years. Just want to first understand as to, now that you're trying to foray into this bridal jewelry that we talked about, is high value business plus high margin business as well, if I'm not wrong. What is the foray looking like? What are the plans to grow this segment as a whole?
Hi, good morning, first of all. The point about the bridal jewelry. So as you know, we have been in the Mangalsutra segment for over decades. And for us to grow, being a Mangalsutra, it is the most key product in a bridal jewelry. So for us to grow in this segment, bridal jewelry, was a must-do point. Because the customers we have, like currently we're having more than 1,000 customers who are consistently working with us, and we are growing with them. And these customers are not only just unorganized players, but giants and organized players as well. So in the whole entire process of growing, even these customers are growing big, and we want to grow with them. So Mangalsutra is a key product for us, but to grow multiple times, we have to increase our product categories. So bridal category was a big demand from our customers to us, as they are seeing good rise in bridal jewelry category. So we have already started developing and selling bridal jewelry in the market. And we are in the tie-ups with all the big jewelers, the corporates, the single chain stores and single stores. Bridal jewelry, if we talk, it's more than 40%, 40 to 45% of the total jewelry market. So that is a big jump we are looking at, and with the existing customers, we are hoping and we are positive that it'll give us a very good boost in terms of growth and in terms of profit returns as well.
Okay, Viraj, with regards to where your overall margins are concerned, they've been slowly and steadily growing, but wanted to get a sense, considering that the gold prices have shot up a lot, with overall condition in the West Asia conflict as well. Where do you see your margins going at? Plus, you're entering, the bridal jewelry space. What are the margins going to look like going forward? Is there going to be a steady pace of growth going forward as well, or they're going to be in that range of 6 to 7%?
When we talk about bridal jewelry, of course, it is a high profit-fetching category.
Correct.
So the other reason also to get into bridal jewelry is that the industry is growing, the category is growing, and with the new manufacturing setup we have just recently started, we are looking at producing much more high-value products which can fetch us more profit. And with the new setup, we have not only increased the production capacity, but we have also increased the quality of the product, the range of the product, and the high range of the product, so which can fetch us better margins and also give our customers a better quality and a top-notch product.
Viraj, with regards to where your capacity utilizations go, they've dropped a tad bit in FY25 as compared to where they were in FY24, if I'm not wrong. What are the capacities utilizations looking like right now? And going forward in FY27, what is the expectations in terms of how they will fare?
When we talk about the capacity utilization, I think it was nearly production capacity utilization was nearly around 70% in the previous years. And with the new setup coming in, and we have almost 2x doubled our capacity. With not only just, and also at the same time, we have increased another category with a new manufacturing setup. So we are looking at bigger volumes, bigger sales, and majority utilization of the capacity. And with the existing customers, the name of the customers you see, and the growth they are showing. So I'm really positive that the growth ratio is going to be maintained, and it is going to increase in future as well.
Got it. Viraj, with regards to your borrowings, the long-term borrowings have reduced to quite an extent, right? They're almost negligible right now. But in terms of short-term borrowings, I reckon that this is on account of, your working capital requirements. But this is compared to where your net cash flow position stands at right now, and cash balance, basically where it stands right now. Do you think that going forward to maybe fund your working capital requirements or maybe fund your expansion, you'll be needing funds? So are you looking for any fundraise going forward?
So currently we are going phase by phase. We are not going to rush into borrowings a lot right for now. But as you know, the capital, the working capital we require with the increasing in gold rate, the more the rate increases, the more capital we require. So currently looking at the existing working capital, I feel that we are more than ready for the market and for the current season and ongoing business processes as well. So in future, not too sure about increasing of borrowings, but yes, to increase revenue and profits in the existing working capital, that has been the key motto for us right now.
Okay, and what is the store expansion plans looking like going forward in terms of the growth plans going forward in FY27?
As you know that we have in last financial year, we have added two new stores, one in Delhi, one in Pune, and Bombay, which is a key main corporate store which we have. So currently we are in the process of more increasing the revenue and scaling up in the existing stores only. And probably once we achieve that, hopefully this year or probably next financial year, we are planning further more stores coming up. But at the same time, not only expansion through stores, but also through facilitators module, which means that we, by not opening stores, but to also make our reach that particular city or that particular state using that module, we are aggressively going towards that. And if we see a potential in another city, so hopefully we may plan and also go ahead for other cities and more stores.
Raj, with regards to where your growth is concerned, how much of it is coming from value growth versus volume growth? Because price of gold have really gone up, right? So, what's the kind of volume growth that you've seen in FY26, and going forward, what is the kind of growth that you're penciling in for FY27?
So definitely the focus has been volume growth for us, because value growth is definitely there, and we'll be seeing in the flowing numbers over the years with the gold rate increasing. But the main focus for us is volume growth also. So we are dedicatedly our entire team, let it be the sales team, which is we have been increasing the sales team, the entire management team, the manufacturing team. So to make it more organized and more productive, we are working towards how to increase the volume growth also. So the bridal category, which we have introduced lately, so that will be a key point for us in volume growth, and we are expecting a good volume from this new category.
Viraj, with regards to where gold prices go, considering the volatility in gold prices, what is the hedging strategy in place right now? How much of hedging do you do? And how do you cover yourself against that volatility?
Yes, so we have always been following a hedging policy, and we are going to maintain it at the same pace, because in such a volatile market, we want to focus more on production and sales rather than focusing on any other aspect. So the hedging policy is maintained. Currently, we are having a 40% hedging policy, and that is going to be maintained, and we will keep up to it.
Uh, Viraj, as per recent developments coming in, there was gold imports that were stuck because of a new DGFT coming in. What's the progress that's happened there? Now the gold imports have a easy free flow, or is gold still stuck there? And any impact on your business because of that?
So, being in jewelry since a very long time, since several decades, the channel we follow for material procuring, so we don't rely on only one source. We have several sources from where we procure our gold bullion. So, we never saw any big challenge coming in terms of procuring raw material or gold. So, because of the system we follow, because of the multiple channels we follow for our supply, and we depend on them, so it has never been a challenge for us.
And with regards to the West Asia conflict, any exposure that you have in Middle East, has that been impacted at all?
Of course, in the last 1 month, we have seen Middle East being disturbed. But Shringar being our 98% of the revenue comes only from India. So we are mainly dependent on India, and only 2% comes from abroad. So of course there has been certain disturbance, but at the same time we have seen a seasonal growth in the same period which we see right now. There has been an Akshaya Tritiya season recently. So that has been a very key season, and a good season, I would say, as I saw a good flow of customers coming in. And so maybe it's all covered up, because my focus has always been, Shringar's focus has always been the domestic market. But of course, we are focusing on overseas market as well. So not only UAE, currently we are supplying to US, we are supplying to UK, we are supplying to New Zealand, and several other countries. So the exposure is so vast that the volume compensation comes from all over the country and from outside.
And Viraj, what is the ratio like right now in terms of your supply, your exports versus your domestic sales, and how will that dynamics change going forward?
So, like I mentioned, 98% comes from the domestic market. But now with the new category coming in, it will be a very key point and a strong point for us to step into overseas market, as we will now be able to go to our customers with a vast range, not just only Mangalsutra, but other categories as well. So that will 100%, I feel, help us penetrate better in the market, and get more and more volumes and sales from our customers. So the new category will not only increase in India, but also from overseas.
Okay, Viraj, thank you so much for helping us answer all those questions, and that too so candidly, and of course taking out the time and speaking with us at NDTV Profit. All right, so viewers, you heard the management. That was Viraj Thadeshwar, the ED and CEO of Shringar House of Mangalsutra. But with that, completely out of time on this edition of KYC. But do stay tuned for more news and updates on the other side.